Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Here's our daily chart, and right now I'm on Kraken, and this is our Bitcoin. And you'll see we're in this descending fib channel for quite some time, basically just oscillating between it. And then we have our key resistance support here in purple. And once we broke down below that, we were able to come back up and test it, and we came all the way back up to the channel, but got a strong rejection on the daily, and then sold back off to the bottom of the channel and put in a new low at the support here, where we put in that inverted head and shoulders, and then got that powerful move up and break from the channel. And just like we had spoke about previously, we're essentially back here testing this same resistance line again and trying to break back through it. We did come up on a powerful move, so don't think for 1 second that we couldn't get another massive wick like this. All the way up essentially to like that 10.6, 10.7, even as high as like 11.6 all the way up here. And then get a rejection back down below it and then sell off. Or again, we could break above it, close, consolidate, and then get that powerful move up. And then, obviously, if any one of those things happens, we'll have to address it from there. But in the meantime, the most likely thing that I would expect to happen here is for us to continue trading inside of this range that we've been in. And the range is at the top here at 95.30 and the bottom here at 6,900. And essentially we've been bouncing around between like 7,000 and 9,500 in this range since back in like mid to end of September when we broke down below it, and then we've just stayed inside this range. So the most likely thing to happen is that we'll continue to trade inside of this range until we don't, because we're only going to break out of this range, confirm one time. So like down here when we broke it a little bit, or we broke out of here, closed, we immediately came back inside of it on the daily. So anything more than like 1 day or 2 days on a close outside of this range, is going to be like considered a break with confirmation, especially anything on like a weekly or longer time frame. And now we are challenging this high here again to put in a new high, which would essentially put in our high and then our low, and then we would take out this previous swing high, and then at that point in time, the next thing we would be testing is like up here at that 11.6 range, and that again is like straight confluence, like resistance support, with the break and confirmations like that we would expect. So the market is basically it's trading in a very methodical and very predictable manner. You can't predict always the direction of it, but it's doing like the moves that markets tend to do, which is good because it's showing maturity in the market, as capital flows into it and as people become more experienced. But what I have noticed is that there's a lot of inexperienced people still here, and a lot of inexperienced people like trying to guide others. So be very careful, because it's not unrealistic to think that we're still going to get a test back down here before we get a move up, or that we could get a big push up here and then a massive fake out and sell back down below this line here, because essentially we could take this out on a wick and then sell right back down below, and it's like, oh yeah, we took out that high, and then we could go straight back down to the bottom and put in a lower low, and that doesn't give us any resolution. So everybody's acting like it's like a switch on or off, like if this happens then it's game on. But that's not how the markets work, and that's not how like risk management and position sizing works. In all reality, you should have like multiple triggers or signals or entry points already determined ahead of time with your trading strategy that tells you if said happens, then this happens. So if this, then that. If we break and close above this on a daily time frame, I'm going to enter with 10% of my trading capital. If we consolidate and move above the previous swing high wick here, I'm going to enter with another 25% of my capital on a retest of the breakout. Like, those are just hypothetical situations, but whatever it is that your predetermined factors are, you should have them set and written down on paper ahead of time, because that's going to prevent you from that in the moment second guessing yourself or second guessing the market, because it's hard to enter a short off of a key resistance level like this when the market is moving up powerfully like that. Just the same way as it's hard to buy when you're down here at the bottom and it looks like you just broke through a key support level. So that's why you need to have ahead of time, if this then that, because that way you don't necessarily have to keep like sitting orders on the books in case all of a sudden the market conditions should change like drastically, or you're like trading a bunch of coins. You don't just have like 20 resting orders on 20 different books, and you got to scramble if something changes in the whole market. Which is particularly important with crypto because everything is so correlated. In traditional markets or other markets, like if you're trading different indexes or whatever it is, assets, you can have resting orders in the books or whatever because they're not completely correlated. If you're trading like gold and stocks, one might dump and the other pumps, and that's okay. But in crypto, it's like everything can be shooting to the upside one second and then everything can be dumping to zero the next. So you can't do that in the same way. So in a lot of senses, like, it's important to have that all predetermined and set out and everything. So even if you don't have those resting orders in the books, you can know, okay, I need to enter this trade, or I need to cancel this order, or I need to adjust my stop loss. Whatever it is, you have that all like predetermined and written down and set and ready to go, and then you can just follow your trading plan. And then when you go back and you have like successful trades, you can see what's resulting, what's leading you to those successful trades. And then when you have like failed trades or whatever, you can look for like some kind of pattern in the failure rate. So you're like, okay, it looks like when this happens and that doesn't happen, the trade has a higher probability of failing, so I'm not going to take those trades anymore. So you might enter less trades, but you might have a higher success rate on the ones you do enter. And that essentially is the goal, like to find the median between the perfect amount of trades that you're entering and the perfect like success or like capital gain total. Because in all actuality, that's what you're looking for. You don't need to enter 1,000 trades, to make 1% if you can enter 100 trades and make 10%, because it all works out to the same thing in the end. So, the idea is to enter the least amount of trades and exit the least amount of trades, because you're paying fees when you enter and exit, typically on exchanges. So you enter and exit as few times as possible to make like the higher level gains. But you do want to enter and exit sometimes because you want to lock in those gains. You can take like a 3 or 4% trade. You can pay out a 0.5% or even a percent in fees, and you're still putting money in the bank. But if you just hold it and we oscillate between the same range, you gave up those gains over and over and over again, and then you end up with the same amount of capital in the end. So it's pointless essentially. You would have been better off paying a small fee to make money and lock in those gains. Like, I heard somebody that I consider to be like a credible person or whatever talking about how they weren't mad that they had missed like this past big run up, because they didn't have to pay taxes on their gains. That doesn't even make sense. Like, the highest tax rate you could possibly pay is like 50% tax. So even if you're paying 50%, which is pretty ridiculous, most people in the USA are paying like 25% or somewhere around there. So if you're paying 25 to 33%, if you make, let's say $100,000 and you have to pay $33,000 or even $50,000 in taxes, you still made $50,000. So the idea of not locking in profits and just letting your gains go back down so you don't have to pay taxes is like the most uneducated thing I've ever heard in my life. So when I hear things like that come from people's mouth, like, it definitely takes away from their credibility, because it makes no sense. And there's a lot to tax law and everything, and I don't know anybody's like specific situation, but I know that if you have an opportunity to lock in gains, regardless of your tax percentage, you're better off locking in those gains than just giving them back so you don't have to pay taxes on them. But anyway, I didn't mean to go on a little tangent there, but I hear a lot of things from people, and it just honestly makes me just question their credibility when I hear something like that. So, and there's a lot of that in the crypto space, so be very careful. And also, like, there's something to like the whole mantra about like taking advice from young people. You definitely, like, with age, gain experience, not only in like finances and trade, but like life skills. And there's a certain amount of stuff that, like, is hard learned, and you can only learn it through like success and failure over time. So I definitely agree with not taking the advice of young people in the same way as you take the advice of old people. But it works both ways too, because when someone older gives you advice, like, it may not be relevant in the same sense. Like, that times have changed and things have changed, and there's definitely something to like experience and growing over time. So I take the advice of anyone. So here we are, we're basically back at this key resistance level, and we're finding it as resistance again. What I'm expecting to happen until we break out of this and confirm, I'm expecting this to act as resistance again and us to sell back off. I'd like to see a retest of the breakout point back over here, and then potentially get like consolidation and move to the upside. This looks to me on shorter time frames. Of course, everybody's like a pattern trader now, and everybody's calling out every pattern they see, and whatever. All of a sudden, everybody head and shoulders because one pattern like played out. Everybody's like the master now. But what this looks like to me is this looks like a broadening wedge. We essentially have like that resistance or sell wall at the top here, and then the volatility of the market like essentially is like indecision. We're trying to go higher, selling off, trying to go higher, selling off, trying to go higher, selling off. On Kraken, it's like very much like the same. But if you look at like some of the other exchanges, you'll see it's actually like selling off to like different levels at different times. Here's another thing that I was taking a look at. I had drawn this up like ahead of time, essentially, like before we got this big move up here. I think we had gotten like this one. That looks like it could be potentially like a Eve and Adam, or Adam and Eve, whatever you want to call it, like topping pattern, and it comes in line perfectly with that top resistance point that we had spoke about essentially on our longer time frames. If you go back to the weekly, you can see that was basically like our resistance there, and now here we are, we're at the top of it, and we'd essentially be putting in like an Adam and Eve reversal and lower high, and then selling back off, and then the target there would be like that $7,900 range again. So let's go back to the daily here, and we'll see, with this big powerful move up here, we still have a lot of time left in the day, so anything could happen in these next like 7 hours before this daily closes. But essentially what I would expect to happen is just lingers around here, stays around here, and then when the daily switches over, we could potentially sell off. Now again, that's just like that's just my opinion on what could happen. It's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. But if you look at it like from this perspective too, if we take the fib of this move up here, we basically came down to the 382, bounced up, try to put in a new high. If we fail to put in the new high here, which we're at the 886 of like this drawdown here, but if we fail to put in the new high here, I would expect us to sell off and come down to a new low past the 382, which in this case would be the 0.5. So put us at like that 8,900 everyone's looking at. But realistically, the measured move of this pattern is going to put us just below the 618 at the 8712, which corresponds with like this key support area right in here that we had like put in on the way up. So I think that's very likely that we could get a move like that, or even, like I said, a strong move down here if this is like the whole wave structure playing out and we do get like the full pullback down here. That could essentially take us down into like what people would start getting scared and feeling like it's like a danger zone. But in all reality, all we would be doing, switch this one over, it's a little more distinguishable. All we'd be doing is coming down here to like the 0.5 to retest the breakout, or even down to the 618, which is going to line up perfectly with not only the descending channel that we were stuck in, so that would be the retest of the breakout and then continuation to the upside. Also comes in line with the 618, also comes in line with the breakout of like this little consolidation pattern that we were in, and then it also comes in line with the upward sloping green support line that goes back like over the lifetime of Bitcoin. So we basically have a lot of confluence down here in this area. I think that would be like a key area for a retest confirmation to the market that we are headed to higher prices, and then we could really get like some legitimate like breakout confirmation on this. And now again, that's going to take time. I mean, it's not going to happen overnight. That's like weeks, months, probably a few months down the road before we would ever get down here or ever break out of this pattern. Now, if we did get continuation here and we got that powerful move up or whatever, I would expect us to break out, get some kind of continuation, a little sell-off and retest of that line that we're breaking out of, and then continuation. I would look for definite continuation and, like I said, challenge these previous highs. So there we have it, Crypto Trend Trader with your daily update on Bitcoin. Give us a like, subscribe, and share if you don't mind. I've noticed that even when I try to like search my own videos, sometimes they don't pop up. Even if I'm looking under like Bitcoin, cryptocurrency, I'll have it all in the title and the keywords, and they won't pop up.